Hello, I'm Dan Passarelli here on the CME Group trading floor. One of the trades we talked about today in our Market Taker Live Advantage Group coaching class was in Sienna, symbol CIEN. Take a look at a chart of Sienna. Now, not too long ago, that stock really had a huge move to the upside, and now that move's sort of overextended. Not a big long trend, just a very violent move to the upside, and now that move has totally ebbed. Now, what comes next? Well, that's a great question. Sienna has proven itself to be a mover in the past. Right now, the stock's not doing very much. It could continue its climb to the upside. It could retrace a great deal of its move and fall back to the downside. My bet is that it's going to do one of those two things and not just simply sit where it is. This stock doesn't typically do that. So the question becomes, how do you trade that? Well, when I see a stock like that where I'm expecting volatility, the first thing that comes to my mind is the pure volatility trade, the straddle. So the trade that I like in Sienna is buying the July 22 straddle at $1.80 or better. Now this involves buying the July 22 calls and buying the July 22 puts for a total payment, a total option premium of $1.80 or less. Now, why might this trade make money? Well, because if the stock rises a lot, well, the calls would be profitable, and calls have limited risk and unlimited profit potential, and I'll lose on the put, but puts have limited risk. So I can make a lot more on the call than I can lose on the put. If the stock falls, just the opposite. I can make a lot more on the put than I can lose on the call. Another way to look at that is that straddles have what's called positive gamma. That means that the deltas, or the directional sensitivity, changes in your favor when the stock moves either higher or lower. Now the trade-off for this, of course, is theta, time decay. If the stock does just sit here, that's the only way that this trade loses, because the time decay or erosion makes both options worth a little bit less each day. So what I would do is I would put on this trade, hold it for a few days. If the stock doesn't move, I would just give up, say, hey, I'm wrong, close the trade, take a small loss before it could become a bigger loss. But if the trade does make a pretty big move in either direction, there's not really any support or resistance nearby, what I would do is wait, and if I could make about an 80% profit or greater on this trade at any point, to me, that's a success. I would close it, take my profits, and move on to the next trade. This is Dan Passarelli here on the floor of the CME Group.